Did you see how fast that stock was dropping? How do you get out of that crisis without hurting your account too much? Hi, my name is Clinton. Welcome. Today we are going to talk about your trading plan. You need to have a trading plan and you need to stick with it. That are the lessons learned of so many traders before you. Today I am going to help you with making your own trading plan. A trading plan should be highly individualized to your financial goals, risk tolerance, trading style, and the assets you intend to trade. I will provide you with some guidance on how to create your own trading plan. Later on, in your own time, you think about what to put in with what you are comfortable with.
Morning, Clinton. Sorry for marching in so late.
Morning, Kate. Just find yourself a spot and enjoy. We have 11 topics to cover, so let's go. The number one topic in your trading plan are the goals. You have to define your financial goals. Is it capital gain? Is it income, monthly income? Of course, it can be both or more. You also need to determine your risk tolerance, both in amount of money and the percentage. But whatever you put in as your goal, you also need to put in a time frame. The goals should be SMART, specific, measurable, acceptable, realistic, and time-specific. Now let us move on to topic number 2, the asset selection. What are you going to trade? Stocks, bonds, options, futures, forex, or even cryptocurrencies? Of course, it is for you to decide, but if you make the choice, then stick to it. The second part is selecting the markets where you will trade: Dow Jones, S&P, NASDAQ, or foreign markets. Of course, you will need to get the permissions from your broker as well if you not have them yet. Let's move on to topic number 3 in our trading plan. Trading strategy. Describe your trading methodology. Based upon what are you buying or selling? What analyses are you using? Technical analyses like Fibonacci, Bollinger Bands, relative strength indicator, moving averages, volatility, etc. Or, and maybe both, fundamental analyses like price earnings, net present value of the cash flow, comparative approach like benchmarking with competitors in the industry, intrinsic value, and so on. Now let us move on to topic number 4, risk management. We talked about risk before, both in money and percentage. But I did not mention yet that you should put in a maximum risk per trade and your overall portfolio. You need to be comfortable before you start trading, especially when you start with day trading. The second part is how to use stop-loss orders to limit losses. This also depends on your broker. Some brokers offer different types of stop-loss parameters. And the third part of risk management is diversification. To spread your risk, you should consider to trade different types of industries, markets, and different types of earnings cycles and types of assets. You check the beta on the stocks and markets. Some markets tend to go up when others are going down. Number 5, position sizing. Depending on what you are trading, you can use the buying power you got from your broker. But when trading options or futures, it is better to calculate the margin and forget the buying power. So try to be flexible in the trades and do not use all the margin you have. If you are out of margin, a lot of brokers will liquidate your positions. Therefore, you need to watch the sizing of your position. The question then is, how much capital will I allocate to each trade? Calculate the size of your positions based on risk and portfolio size. Number 6, entry and exit rules. Provide clear rules for entering trades, based upon technical or fundamental triggers. And, even more important, is to specify the criteria for exiting your trades. Criteria like profit target, in money, percentages, and/or loss. Number 7, your trading schedule. Consider a planning on what days and between what time you are planning to trade. Do not forget economic events and news releases. Number 8, record keeping. Some brokers will provide you a trade record, but it is better to do it yourself. Why did you enter? Based upon what? Write down the profits and losses, and if the profit or loss would be bigger if you stayed too long in the trade. It is just for your own lessons learned. That way you will get better. Pause 1. Number 9. Emotional discipline. You pull the trigger on your trades, never get emotional on trades. Follow your own plan. Take a break when trades went south, and think about what you could do better. Number 10. Contingency plan. Plan for unforeseen circumstances such as significant drawdowns or market disruptions. Consider alternative strategies or risk mitigation measures. And the last topic, number 11. Review and adaptation. Schedule regular reviews of your plan, look at the trades you made and what you wrote down to do better next time. Also, adjust your plan if circumstances change. Remember that your trading plan should be flexible, but also followed with discipline. It's essential to continually evaluate and adjust your plan as you gain experience and encounter different market conditions. Additionally, consider seeking advice from financial professionals or experienced traders when creating your plan, as they can provide valuable insights and feedback. And do not try to do it all at the same time. Keep it simple. Take the time to think it through. The most important part of trading is discipline. Stay with your plan. If you do that consistently, you will be successful. And now to remind you, I will show you all the topics again in a row. Welcome back. I hope you can use some of the things in my presentation, and really hope you will become as successful as you want to be. And know it is time for myself to do some trading. But before I do, I just want to thank you for watching and hope to see you again. Thanks for now, and do not forget to subscribe, like, and share. See you next time.